Now, Africa has got unique drivers for growth. So, although currently 15% of the world's population is based in Africa, it only represents 3% of the GDP. But these drivers are going to change the landscape in Africa going forward. Firstly, we've got the demographic dividend, we've got the growing middle class, the increased use in technology, urbanization and infrastructure, and then the development of the financial services industry. Now, on the demographic dividend, the population growth and the resulting demographic dividend could result in significant economic growth. But we need investment in industries that effectively create jobs, and here pension funds and revised tax regimes can play an important role going forward. Also by 2020, we expect more than half of the Africa population to be older than 20 years old. So that is a huge increase in your working class. In fact, by 2035, the working class in Africa will be larger than that in China. Now, these falling dependency ratios should increase both savings and investment, and then create a bigger demand for retail savings products, and also boosting also with the older population, boosting the pensions and life insurance products. The growing middle class is very important because of the emphasis on education and also their demand for more sophisticated financial services. Now, the number of middle class households in Africa is expected to increase from 15 million in 2014 to 40 million by 2030. And a country like Nigeria alone will add 7.6 million. And the interesting part, of course, for Africa is the use of technology. Don't discount the impact of technology on the African continent. Africa has 1 billion inhabitants and 800 million cell phones. And that, of course, drives mobile financial services. And also, if you look at it from a demographic perspective, 63% of the African population live in rural areas, and technology effectively exposes them to financial services.